Welcome back to another episode with Sky's the Limit podcast. I'm your host, Mike Doherty, and today we have Matt Brawner from Endurus Capital. Matt is been investing in real estate since 2011. He's got a wide breadth of experience in the business as an investor, a broker, and property manager. He's also the founding partner of Minnesota Capital, which is a holding company, and he lives with his wife and three children in Dayton, Minnesota. So welcome, Matt. Really appreciate you coming on the show here.
Absolutely, Mike. Thanks for having me. Excited to be coming to you from still snowy Minnesota.
Yes, yeah. It's actually warming up here in Connecticut, so happy about that. I'm ready for the winter to be over. So one question I'd love to ask all of our guests is, how you got started in real estate. Based on your bio, you started in 2011. Curious what you did before that and what you've done in real estate since 2011.
Short answer is I needed friends. So in 2011, I moved to the Twin Cities, was working for Target. There was a group of guys that I had kind of one connection into, and they were throwing $50 a month at the stock market and drinking beer. We seemed to spend more time focused on beer than we did at the stock market. And there was a subset of that group that said, hey, if you really want to do some investing, we want to look at real estate, come to breakfast in a couple of weeks. So I went to breakfast with the guys. I only knew one of them. And they were talking about buying townhomes. It was 2011. There were questions about whether or not the real estate market would ever come back. Townhomes had been hit especially hard. You could get into it easily if you had limited capital because the HOA would take care of a lot of the exterior repairs there. And I had $5,000 to my name, and that was how much we all had to throw in to get started. I was renting a bedroom from a high school friend of mine and just had the honest thought of, if I lose this money, that stinks, but no one's depending on me to eat. I'll find a way to make it back. I'm employable, and I'm sick and tired of being by myself on Friday and Saturday nights. I want to branch out. I want to meet people. So it was like, all right, well, if this is a way to make friends, let's do it. Fast forward, we bought a whole bunch more townhomes because everything's just been reinvested into the property. I went from Target to work as a professional fundraiser for a nonprofit. Traveling around allowed me to be a mobile landlord there. Since I was in and out of airports all the time, I could take calls about busted toilets from tenants. The saving grace to that was that I got to know the business really well on a fundamental level. I've done every job there is to do in real estate. And as the company continued to grow, it just placed me through pure happenstance in an important position within the company. And so when it was time for somebody to quit their job and do this full time, it was natural for it to be me. So I moved my family back to Minnesota. We had migrated down to Austin, Texas. I thought we were going to spend the rest of our lives there, but came back to Minnesota not really knowing a whole lot about apartments. So we focused all on townhomes. I thought that's all you ever did was just buy more townhomes and rent them out. First time somebody brought us a syndication, we were honestly questioning whether or not it was legal because our whole model was everybody does everything. We paint the unit ourselves. We do the showings. We do the collections. Had 5 other partners. So the idea of buying something larger was just never even on our radar. But we were fortunate through some personal contacts. I actually went back to Target, invested into a couple of joint ventures. We were in a good spot because we had capital to invest and had another partner that needed some help guaranteeing loans and needed help sourcing capital. And so he brought us in purely as a joint venture. And he did all the property management and just deals that did well, bought for good basis, good fixed rate debt, and we're able to take out some pretty significant profits on a refinance. And it just opened our eyes of like, oh my gosh, you can do this. And so we started doing more. And we've changed the specific property types that we go after. Can talk more about that. And we kind of went through this loop of we're going to manage everything to we're going to have everybody, or we're only going to work with third-party managers. And now if we've scaled, we're bringing a lot of management back in-house. That's kind of our big initiative right now, just so that we can do the best we can to ensure our residents have a quality experience and that we drive the returns we need to for our investors.
Yeah, it's amazing. So for all the listeners, can you explain exactly what you do at Endurus Capital? I know it's yourself and 2 other founding members, Drew and Todd, I believe. And you have obviously other, team members under that. But from a day-to-day perspective, what are you doing? What are you investing in? And then I do have a follow-up question to that.
Absolutely. So Endurus Capital is Minnesota Capital Management. Drew Whitson and Todd Dexheimer. All of us are based in the Twin Cities here, and we are a multifamily real estate investment firm. We focus specifically on value add multifamily. As of late, we've looked more towards the 90s and newer product. Now, there are exceptions to that. We bought a deal just this past year that was a little bit older simply because it was an attractive loan assumption right across the street from an existing property that we own. But we are focused in the Midwest, and we have done a variety of deal types and sizes, have done some really large lifts there. But our bread and butter is value add where there may be a lighter construction aspect to it. And then we can drive value just through efficient management and operations. Now my day to day is running our property management company, and we are trying to bring our properties in house so that we can be vertically integrated here. And that's purely so that we can better control what's happening on the ground. I think as you've seen the last, call it 4 years in real estate. You went from 2021 where you put out a for rent sign and you had 10 takers at pro forma plus rents to all of a sudden inflation rips 22% and every line item is important. And we feel that having this level of control gives us the best opportunity to control those costs.
Yeah, no, it makes complete sense. So I interview a lot of different people, have a lot of different conversations, everywhere from industrial to self-storage to laundromats to multifamily. I invest in multifamily commercial assets myself. Why do you like multifamily as opposed to other asset classes?
I'd love to tell you I did all this analysis and picked multifamily, and it was so sophisticated. The fact is, it's just the one I chose. Now, the reason I've stayed with multifamily is much different there. I got to know it because I understood the basics of here's how a unit is rehabbed, here's how a unit is put up for sale, and how you rent it out. And you really, really have to understand the nuances in real estate. Real estate is an incredibly inefficient market, and that's a positive thing because that helps you identify value there. But although we've been fortunate because we've had some connections and that have allowed us to invest in a very select few opportunities outside of multifamily, and there's plenty of good ways to invest outside of multifamily, but we are getting deeper and deeper into multifamily because it's the details that drive the performance of your investment and your knowledge specifically of the product, like how buildings operate, that becomes so important. So it's just been so much institutional knowledge that has kept us focused on multifamily there. The other pieces that I like about it are that one, because you are providing people's homes, you have better sources of liquidity, I think, than other areas of real estate. You get better financing options there. Obviously, this could change if Fannie and Freddie end up going private, but there's no Fannie and Freddie equivalent on the commercial or the industrial or retail side there. So knowing that you have this backstop that can provide liquidity to go out and purchase properties, I think is incredibly important.
Yeah.
Number two is the tax advantages. Not all real estate is created equal in the eyes of the IRS, and you get better taxable losses. I believe, I'm not a CPA, but through multifamily investment, and people are always going to need a place to live. There come with some caveats there. You're always dealing with government overreach, but you have a captive audience.
Yeah, no, completely agree. Hedge against inflation. We talked about this before we went, kind of live, doing cost seg studies, bonus depreciation. There's so many benefits to multifamily, and I got a good amount of multifamily myself. Nothing to the caliber you guys are investing in the 100+ unit complexes, but it's definitely been a tried and true investment class, diversification against the stock market. And we've done well. I just started dabbling into some triple net lease stuff. I think the holy grail of commercial real estate's land lease.
Yeah.
Haven't been able to find anything like that. I don't even know if they still exist as far as to buying them. But I think having a land lease deal would be amazing. I've seen some positive stuff about self-storage, if you can find that, some mobile home parks. So I think that's what's beautiful about real estate. There's so many different avenues that you can go. It's not kind of like a one-stop, fits all. So what are you guys seeing right now for the market overall as a whole in Minnesota? I mean, everywhere has a different market. So you probably know Minnesota the best in that region. So I'll ask you about that. What are you seeing there? as far as appreciation and when you're buying newly acquired assets, what kind of cap rates are you seeing for the newer build stuff you call 1980s and above?
Sure. So a lot to talk through there. Don't let me forget. Maybe we can talk about it offline later on. We're actually doing a land lease deal right now.
Are
So
you?
yeah,
Oh, I'd
it's
definitely love to hear
as
about
as
that.
I
Yeah.
mentioned, we get some stuff that just kind of comes our way, and this one was super unique. But right now, I'd say Minnesota is pretty emblematic of the Midwest overall, which is really where we're focused. Midwest doesn't go boom, but it also means it doesn't go bust. And so that's what we've liked about it. We've seen good amounts of supply. A lot of people in our industry right now, all they're talking about is supply, supply, supply. And we can all see the change coming, right? Because completions are so far outpacing starts. And so this wall of supply is about to be gone because no one can afford to build new at these interest rates. And then I think we're going to be back to an affordability problem. But the Midwest, you said some markets like Minneapolis see, for us, record high supply, but it just got absorbed incredibly quickly there,
Hmm.
um,
Hmm.
because we just hadn't seen much there. We're still seeing rent growth in our markets. Minneapolis, we're probably most nervous about government overreach. We did a lot in St. Paul. Unfortunately, St. Paul's a wonderful city, and it's been in the news for all the wrong reasons. The city governance just cannot get out of their own way, and they're exacerbating a problem with a purely stupid policy. And I don't say this as a property owner. I say it as somebody who has a heart for tenants, because by capping rents, they're actually making it more expensive to live there, because no one can develop new now, and they're
Right.
reaping the consequences of their decisions. So you have to watch the government overreach in that regard, but we continue to see positive growth, positive migration here. We haven't seen the crazy cost insurance. I mean, insurance is up for everybody, but it's not up the way it is in the Sun Belt and down in Florida there. So I think those are kind of the key highlights, and we're starting to see people turn their attention to the Midwest. Right now on a stabilized deal, as you're selling stuff, you're going to be, if it's C plus, B minus, you're going to be north of 6 on a cap rate. As you get into some nicer stuff, maybe 5.5 to five
Yep.
and three quarters. Um, Down in Texas and other crazy hot markets, they're seeing four handles again. We're not seeing anything like that. Because of the value add stuff that we've done going in, the cap rate isn't super relevant to us, because we go in with an eye towards such a large reposition. It all comes down to where the property cash flows afterwards. And I think the thought I would finish up on, and it's been the greatest change I've seen since 2021, is going into 2021, everyone's underwriting on a cap rate. Where can I get to on appreciation? What's the sale price that I can hit? And seemingly overnight, that point of view has become irrelevant, and it's just all been about the cash on cash. And I think the thing that's driven that is the Treasury, and not because the Treasury's pushed up interest rates, but because the Treasury's adjusted the risk-free rate of return, right? If people can go buy a Treasury and make 4 to 5%, and you're going to introduce risk by syndicating an apartment complex, your cash on cash better be better than 4 to 5%, regardless, the
100%.
tax benefits aside there. So that's just kind of
Yeah.
a quick mind dump on how I think people are
No, it
looking at
makes
the
sense.
Midwest right now.
I want to ask you about the land lease deal, but before I do that, is there any, so in addition, well, based on your answer, is cash on cash one of the more attributes or metrics you look for when analyzing a deal? When you do a cash out refinance, are you looking for the cash on cash after refinancing
Looking at the cash on cash all the way through. And that's
all the way
what's
through? Okay.
changed, right? Like,
Yeah.
you used to look at deals like, hey, it's not going to cash flow early on, but it's because such a big lift. But if you get it here, it could be a really sweet deal. No,
Yep.
those deals are gone. You've got to
Gotcha.
produce cash flow.
Okay.
And it's been just how people's minds have pivoted in this interest rate, in this interest rate environment
Yeah.
here.
Yeah, makes sense. So tell me about this land deal or land lease. And
Mm-hmm.
for all the listeners out there that may not know what a land lease is, if you could explain what it is, talk about how you found one, and just talk about your current experience with one, that'd be awesome.
Yeah, we're right in the middle of it. We bought a retail center because Minnesota Capital Management, the holding company, we own some ancillary businesses, and one of those businesses uh, rents out commercial spaces. And we had done a lot of deals with a broker, buying about 100,000 square foot retail center, and we were able to put ourselves in as a tenant that took the deal to like a 7% cash on cash on day one by putting ourselves in there. So made it incredibly attractive. We went through this big rehab, and it's at the absolute center of one of the growing southern metros of the Twin Cities here down in Apple Valley. And we didn't appreciate it when we bought it. The deal worked just as is, but there are these two um, out parcels that the way it's set up is you've got two buildings. There's a north building and a south building, and then in between them there are two out parcels that can be rented out. And we have a restaurant that had been looking at this area for about, I think they've been chasing it for almost 15 years, and they just could not make things work with the previous owner and work with the previous city or work with the city. And so we have come to an agreement. We have a lease that's contingent on getting final approval from the city here, but they are going to lease that. We call it a ground lease. They're going to lease that parcel from us. We have to give them money, and we've got a lender because of the rents that we've achieved on our renewals. Within the space, the lender will fund pretty much our whole TI contribution to this restaurant to build out. The total project is going to be about 1.2 to 1.4 million, including our portion of the build out. But then we should see right now, I think the ground lease rent is going to be about $128,000 per year. So it's we're not all the way home yet. It's been difficult to get here, but it's been super fun to learn along the way.
Yeah, no, it's amazing. So essentially, for all the listeners, you own this piece of land already, and you are working on leasing that piece of land to this restaurant. And in exchange, so think about like Starbucks. Starbucks leases all of their buildings. So someone owns, or at least majority of them that I'm aware of. And in exchange for them leasing that land, you will contribute towards building the restaurant for this tenant, and they will lease out, they'll lease that space from you for land leases are pretty long. I mean, if you're still in the middle of it, you don't have to get into it. But I mean, I've seen 100-year land lease deals. I don't know how long yours is, but
30.
in exchange, you will give them, you said, how much are you contributing towards the tenant improvement money?
800K, and then there's a bunch of other site work that we've got to do
Yeah.
for the city to bless it. We've got to bring utilities there. That's a major difference between multifamily and industrial or retail real estate. The city exists in such a larger capacity out there, and you can't run from them. Like, they're
Mm.
involved every step of the way. And if you try any shortcuts or going, not, you just have to engage them too, like get their opinions and their informal blessings on things. Because if you don't, they will torpedo your project. And so we've had a great project manager with Onyx Construction that's overseen this for us, and they've done a lot of work with the city, and they've been really invaluable to get us to this point. Our specific land
Yeah.
lease is a 30-year deal, but it's really incredible because we don't retain any obligations afterwards, right? If there's issues with the roof, that's the tenant's problem here. All we are doing is, once this is built, you're just going to pay us for having a building sit on our dirt.
Exactly. And correct me if I'm wrong, but after the 30 years, if they don't choose to renew, you keep the building.
We get the building.
Exactly. So at that point, it's already paid off. It paid off.
Yeah.
You can either parcel that piece of land in the building off and sell it off as one, or continue to lease it out to someone else for another 30 years. I mean,
Yep.
it's a win-win-win-win-win. I
Yeah.
would, and I'm only 32, but I would love to do a land lease deal at some point in my career, or something very similar, which would be like an absolute triple net, right? Where the tenant is responsible for everything.
Yep.
And if you don't mind, can you explain to the listeners, why would a restaurant like this, or why would a Starbucks want to even consider leasing something for 30 years and then possibly just walking away from this structure? What is the benefit to them?
Well, it's a couple of things. One, retail is all about location, location, location here. There's very few companies that can, like a Starbucks or any type of restaurant, they can say, hey, we think it's going to grow out that way. We're going to go build something and wait for 10, 15, 20 years. They just don't have the cash to be able to do it. And so what that translates here is that you've got a piece of real estate that is getting the traffic count they need, and so that's highly valuable. Those pieces of real estate are really hard to buy, and just the small parcel that they need, those individual parcels hardly ever come for sale. They don't exist, right? Like this parcel is part of a larger retail strip center. So if you wanted to buy this parcel, you also have to understand how to operate the retail strip center. And if you're Starbucks, you understand coffee. You don't understand retail real estate in this regard here. Now,
Right.
30 years is actually a pretty long time in this business here. So, Starbucks, the restaurant we're working with, they've got the math that shows them that, hey, even if we had to walk away, this is still a great deal for us based on what we can project for our business. And then the other thing is that the lease rate's taken care of. Because it's 30 years, it's fixed for them, right? Retail leases it's very landlord friendly right now. So as you don't want, the last thing you want as a small business owner is uncertainty, and the uncertainty comes as your leases turn over, and that can really torpedo your business.
Exactly. Yeah. No, couldn't have said it better myself. One question I always like to ask all of our guests is, what does your day to day look like? So, personal stuff too, if you don't mind getting into it. Maybe you like working out in the morning, so your day starts at 6 a.m. You go to the gym, or maybe you're getting your family ready for the day or school, and then then you go to the gym, or maybe you meditate, maybe I don't know. Just take me through from the time you wake up, your day, and then from the time you go to bed. I'm always curious.
I'm the most structured guy you're going to meet, and
All right.
don't become friends with me because I wake up incredibly early. I get up at 4 a.m.
Oh my God.
That's my scripture
It's like
time.
Mark Wahlberg hours there.
Yeah, that's my Bible reading time. That's the first thing that I
Okay.
do every single morning, and then I go and I wake I've got 4 kids. My little boy likes to come work out with me, and we're fortunate we've got a barn that has a bunch of workout equipment on our property here. So I go work out in the barn with my little guy at 5:30. After I get done with my scripture time, this is the reason you don't want to be friends with me. I'm like, I know no one else is up, but I'm going to text anyway, just because I'm
Yeah.
starting my day. And if
That's
you're in
it.
bed, you'll get it when you wake up. Like, that's fine.
That's right.
And so I get some work done there, go in, take my little guy, we work out together, come back, always eat breakfast. We homeschool, so eat breakfast with my kids, and we review the day there. Come back, get a little bit of work done, and then I go and lead always from 8:30 to 9:30 with homeschool, so my wife can go get a workout in, and I like that because I want to be a part of that. I want to demystify work. I want the kids to be able to see what dad does and be around dad a lot. We could have
Yep.
another conversation, but I'm really, really passionate about having dads be highly visible to their kids. And then it's meetings throughout the rest of the day. And I typically get done around about 5 o'clock. It's our family dinner time. We have a few activities during the week. We've got some chores. It's kind of a little hobby farm that we've got here to take care of. And then getting up at 4 a.m. has its consequences. Like, no one likes watching movies or TV with me. I turn into a pumpkin at like 8:30 and fall asleep on the couch.
Yeah.
So
No,
that's me.
that's awesome. That's why I ask. Everyone has a different routine. I'm very much not a morning person. My business partner is, but it's funny. I like to try to work out in the morning because I feel like everything. If you say I'm going to do it at 4 or 5 o'clock after the day is over, something always comes up. So definitely like to try to get a workout in the morning as well. And no, that's amazing. I'm very much a night owl, so I'll stay up till 11, 12 o'clock watching movies, and my wife's sleeping on the couch next to me. So, but no, I mean, you guys have had amazing success.
Appreciate it.
Thank you so much for sharing your story, and I wish you all the best going forward. I mean, these 100-unit multifamily buildings you're taking down are amazing. The land lease deal sounds amazing. I'd love to maybe pick your brain offline about that further, but
Yeah.
I really appreciate your time. Thank you so much. And yeah, we'll chat soon. Thanks, Matt.
Absolutely. Thanks for having me.
Thank you for watching Sky's the Limit. We're always releasing new real estate content, so if there's something you want to hear, be sure to leave a comment. And don't forget to subscribe to our channel.